Okay, so guys, we'll get started. Now, as you can see, this says day 5. We're swapping day 5 for day 4. Because day 4 is just a tiny little bit more complicated. But what I want to do is take some advice from a couple of members in the group who have said roll on to entries straight after looking at the patterns and identifying how we use the higher timeframes to our advantage. So today we're really going to be looking at stop losses, entries and stop losses, risk to reward ratio, and protecting your trades. Now, this is probably going to confuse you in terms of it being so simple, but I want you guys to really focus on what we've been learning from Monday and leading up with regards to Tuesday market structure and recognizing patterns. We're only really looking for two things in the market, really. One of those things is price coming back to a strong key level based on market structure. So if we're in a sell bias market, we're looking for price to come back to resistance. If we're in a buy bias market, we're looking for price to come back to support, but based on the structures that we've obviously learned this week. The second thing that we're looking for is when price comes back to these structures of resistance and support based on market structure, whether our bias will be sells or buys, we're looking for 4-hour candle closes to show us signs of rejection. Once price shows the signs of rejection, this indicates to us that price is potentially going to continue in the direction that we've chosen. I.e., if a trend line's broken, it pulls back to a resistance level and makes a double top, our bias is potentially going to be sells. So if we start to see that price at that level of resisting and creating wicks, then that shows some sorts of signs of exhaustion. And as you guys would have learned this week, the only time we really want to be entering the market is when price is in momentum. So in that case, we're looking for price to be pushing down. And that's when we want to get into the market. So we're not really worried about if the next 3 candles were engulfed by the current engulfing candle, or if the pin bar had a candle body that was 25% less than the wick itself. We're not really interested in that crap, okay? Because, the candles tell us what we need to know. A strong-bodied candle tells us that there's strong momentum, okay? And that bulls or bears are in control. Rejection wicks or wicks indicate some sort of exhaustion. Does it mean it has to exhaust? No, but we're trying to obviously bring everything together to find confluence in the trades that we're entering. And once we become consistent at mastering doing that over and over again, and as Rom's just mentioned, we enter the trades knowing what we're going to lose. And then if we lose, we move on to another trade. Then that's when you're going to start to accelerate. Because at the end of the day, we're ants in the market, okay? And as much as ants are soldiers in their world, in this world, we're not. So all we've got to try to do is survive. And when you watch the bonus video at the end of the week, you will see how we learn to survive in the market in an extremely simple way and a very powerful and effective way. So if you haven't watched the video, try not to watch it. If you can't wait, then watch it. That's fine. But I would wait to finish for tomorrow, and then you lot can go on to watching that as you wish, okay? So let's move on. We're going to look at what we're talking about here, okay? Now, as I said, it can be very simple, and as I call it, stupid simple. But we need to know what our stop loss is, okay? And you guys probably know already, our stop loss is this here. Now, what is this? Well, this indicates to us that if price intends, or we intend for price or expect price to push down, we get rewarded. If price pushes up and then eventually hits this area of our stop loss, we get taken out of the trade, okay? Now, again, this is our reward if we're buying the market. And if we're selling the market, if price pushes down and hits our stop loss, then we get taken out of the market. Now, if you notice, guys, looking at my stop loss and my take profit, it's fairly consistent, okay? I have a 10 pip stop loss here and a 10 pip stop loss here. And then I have a 30 pip stop loss here and a 30 pip stop loss here. Now, I want you guys to really try to master using very small stop losses, okay? Especially with the way we're going to enter the market. So you shouldn't really be having to worry about drawdown too much. The only thing you're going to be really worrying about is if price starts to reverse on you, okay? Which happens, and it's obviously you need to understand that and accept it. So what I want you to do as we move on is understand what I'm trying to illustrate. Try and think about it as we move forward without me telling you, okay? Here is your take profit, okay? We just explained that. This is my take profit. So I have a set stop loss and I have a set take profit. Now, this box here, you probably will see on my charts on a regular basis using TradingView, okay? And I want you to look at this box as your best friend, okay? This box is what's going to save you. This box is going to be the thing that eliminates all the thinking that you really need to be doing and questioning whether you should be entering the market or not, okay? We'll go into more details as to why. Now, I want to ask you guys, how do we enter the market? Based on what you've learned this week, how are we entering the market based on this strategy? It begins with an M. When price is in what?
Momentum.
Momentum. So, as an example, if we notice that our trend line's been broken and price is coming back to a level of resistance, do we enter the market as soon as price comes to this level?
No.
No. We're expecting price to continue to reverse, but we only want to enter in momentum. So if price starts to push down like this, and then we decide to enter here, is that momentum? It's not a trick question. If price is pushing down from the level, is that momentum or potential momentum?
Yeah.
Very good. Okay. So how do we enter the market? Well, it's very simple, okay? You will only ever enter the market or a trade when you have a valid stop loss and take profit. Now, remember I spoke to you guys very briefly about this box being your best friend. If I'm going to enter the market, what am I going to bring to the market with me?
Sword and shield.
Yeah, well, you've watched it, man. You chill out. If I'm going to enter the market, this is my stop loss. Am I going to bring my stop loss to the market?
Yes.
Yeah.
Because we need a stop loss, right? If your stop loss violates what your trading plan says, so say as an example, you set and you make it a strict thing that you only trade if you have 15 pips or less. If you have a stop loss of 17 pips, do you enter the market?
No.
No. Okay. So I want you to just keep bearing that in mind, okay? Now, when you enter the market, this should be common sense to you guys. Your trading setup must meet your criteria, okay? Now, the criteria will include the patterns that you've learned this week. Your analysis is taken on the 4-hour time frame, and you, of course, will monitor it on the 1 hour and 30-minute time frame, which will indicate to you a potential direction of the market. Our 4-hour time frame is going to be used for what? Marking our
zones and levels.
very good. The 1 hour and 30-minute time frame is going to be indications of what? Or sorry, it's going to give us signs of what?
The direction.
Before direction, because remember, if price is coming to a structure level, this is a 4-hour candle close, and then on the hourly time frame, we will have things like this.
Rejection.
Very good. So the 1 hour, 130-minute time frame is going to be used to look for signs of rejection. Now, all we're going to be looking for is exhaustion wicks, and they are the key to identifying a potential trade opportunity. If price tries to push through a level and goes deep into a level that we know is of support based on our criteria that we've learned this week, which is our patterns of market structure, and then rejects it, can we start to identify this as a strong level of support?
Yes.
Very good. Now, when do you take a sell?
When the market's trending down.
When the market's trending down, or the market is doing what? One other thing.
Making lower lows.
Okay, even simpler than that. If the market is trending down, we take sells. And if the market is trending up, price violates and shows potential signs of
reversal.
Very good. So that's when we take a sell in a trending market down or a reversal pattern or setup that you've learned this week. And then the same for buys. We only take buys in a trending market up or a potential reverse pattern that you've learned this week. Is that fairly clear?
Okay, yep.
Yeah.
So now this is example number 1. What do you guys notice here?
It's moving down.
Why is price moving down?
It's making lower highs, lower lows.
Very
and lower
good.
highs.
If we keep it very simple, price is doing what? Remember, step in.
Stepping down.
Down.
Very good. Price is stepping down. Now, when we get to this level here, what can we see happening with this wick? This is a 4-hour time frame.
Starting to reject.
Starting to reject. Now, this is a potential sign that this level is now becoming what?
Resistance.
Very good. And we're now waiting for price to come back to this level in order to potentially get into the market. If price comes to this level, do we enter the market?
No, as yet.
No, not yet. Now what we need to do is see price, and what's very nice to see with our strategy is price breaking these levels and then start to either close here but fail to push up, or exhaust at this level and start to push down. Now, you really want your stop loss to be around the resistance level, right? Because that's going to be your safest option. So we're going to move on to see how we can enter this market. Everybody understands now we're in a sell bias market because price is pushing down and now price is giving us a sign of rejection. Okay? Now this is the same example but on the 1-hour time frame. So of course, remember the 4-hour time frame gives us 4 hours of 1 hour, 4 1-hour candles. Okay? So we can see price pushed up to this level, it started to reject it, and in this rejection price pulled down. Now, let me ask you something. Do we enter the market here?
No.
No, it's not a trick question. I want honest answers so we can just iron it out. Do we enter the market here? This is a bearish.
Not with the strategy.
No, not with a strategy. Now, if we enter the market here, how many people have we got on this? We've got 12 people. 1 or 2 people need to come in and help Jason and Kath, okay? Because they're doing most of the work. If we enter the market here, and then we have our stop loss here, but we only use a 10 to 15 pip stop loss, how many pips do you think this could possibly be? 20, 30? Even
More
40?
than 10, yeah.
Yeah, exactly, more than 10. So this does not fit our criteria, right? What we do know is that this is a 4-hour key level. So what do you think we're waiting for price to do?
Just start breaking below the candle right before it, that support area.
Yeah, or we can wait for price to do what?
Retest.
Test.
Come back to this level for a retest. Okay. So now what we need price to do is to come back to this level. Okay, this is the 30-minute time frame. Now, if you notice here, I call this a stop loss range. Now, I took these examples off of UJ, so I'm only using a 5-pip stop loss and a 15-pip target. Bit stupid for the example I was using with 10 and 30 pips, but whoop-de-doo. But the point is, okay, once we know this is our 4-hour key level and price starts to reject this level, all we're simply waiting for is the price to come back in and around this level. Is this making sense?
Yeah, that does, yeah.
Okay. Now, whether price breaks this level or continues to push up, as long as price does not come back to find support and push up, we are still in a sell bias market. Is that clear?
Yeah.
Now, this is our stop loss range. Now, the reason why it's called a stop loss range is because as long as price is within this area, price is within our stop loss range. So looking at the example we've got here, does anybody know, and not Jason, does anybody know what we're waiting for price to do? We're waiting for price to come back into the stop loss range and then do what? This is our resistance level, 4 hours. What are we waiting for price to do?
Go down.
What was that?
You expect the price to go down.
Very good. We expect price to reject this level. Now, I'm going to get better at doing these courses, but the point is, if price is pushing up to these levels, more than likely, these are green candles at this moment in time, okay? So this is indicating to us that price is pushing up. So the only time we want to trigger into this market is when price starts to do what?
Reject.
push down in momentum and reject. And then we use something that we call a sell stop. Does everybody know what a sell stop is? Does anybody not know what a sell stop is?
Is it like take profit?
No, a sell stop is where you use, so say at this moment in time, okay, this level is 100, okay? This level here, where this line is 100, okay? This is where we want to enter the market at 100. But right now, the price at this level is at 120, okay? Now, what do you think will happen with this number as price starts to push down? It's going to go down, right? 119, 118, 117. And then when price gets to 100, we get entered into the market. Does that make sense?
Yeah.
Okay, fine. So all we're waiting for now is price to hover
Can I
around this
ask a
level.
question?
Yeah, carry on.
Sorry, man. I just want to ask a quick question. When you set the sell limit, and the
It's
price
not a
is
sell limit. A sell limit is when this is a difference between a sell limit.
sorry. I mixed up my words there. I was referring to a sell stop.
Yeah,
Okay. So can I annotate quickly?
absolutely, bro. Please.
So say for instance, like the price is still over here. Can you see my arrow?
Where are you? Yo, click
Um,
the screen. Click the screen.
No, I'm already. You see this green arrow?
Oh no, hold on. Who's talking?
It's Romeo.
Romeo. Yeah.
Okay. Can you see my green arrow over here?
No, you just have to wait 1 second, bro. Okay, now you should be able to click my screen.
Okay. So can you see my arrow now? Come on.
Okay, hold on. What I want you to do, Roms, is go to your Zoom and do annotate, yeah?
Yeah.
And use an arrow, please.
Okay. I'm doing that. Can't you guys see my arrow?
Draw on the screen, please.
I am drawing on the screen.
Yeah, there you go. We can see that one.
Okay, cool. So I'm just gonna delete that one because that's not what I want to show.
Yep.
Say for instance, price is over here. All right. Can you see my arrow?
Not yet. We can't. Yep.
Yep.
It's price over here and it's still busy moving up. Can you already set your sell limit?
A sell limit you can set. A sell stop you can't.
Sorry. I'm mixing up my words here. I'm referring to the sell stop. Okay.
Okay, right. So that's a good question. Very good question. So no, the only time you want to set your sell stop is when price is in your sell stop loss range, because
Okay.
this is confirmation to us that price is doing what at this moment in time while it's in this area. What is price doing? If price moves from this area to this area and then comes into our stop loss range, price is pushing what?
Pushing down.
No, if price is coming into our stop loss range,
Yeah.
price is pushing up. So now all we're waiting for is our key level to show signs of rejection and do what?
In reverse.
Push down and then trigger us into the trade when price is in momentum. So we're only entering the market when the market is going down.
Okay. So my question is, if we see that and the market is moving up, it won't be triggered, eh? Only when it comes down.
It will only be triggered when it comes down.
Works.
Okay. Awesome. Thanks, man.
That's fine, bro. No problem. So let's have a look at this example. There's some, yeah.
Can you? Yeah. Just a note on that. You won't even be able to set it.
No, you won't. Yeah.
You'll have to set what you were saying before. So
Yeah.
if price is moving up at the time, sell stop has to be below current price.
Yeah, that's
So you
true.
you won't even be able to set it until the price is above where you want to sell.
To sell it. Yeah, that's true. So
There'll be
Roms,
a sell limit at that point.
yeah, that's true. So Roms, if you're trying to obviously get these prepared for when you're at work or something, That's the only thing I can think maybe asking this question for.
Yes, that is the reason why I was asking.
Yeah, you like Jason just said, you will only be able to set them when price is above your potential area. But this is why, right? This is why I think, well, I personally believe this is a very good way to enter the market for those at work as well, because all you have to do is set what here?
Alert.
An alert. And then when this alert goes off, you just run to the toilet, okay? When you're at work, okay? And you set your sell stop quickly, okay? And then you just let it run. I mean, it's up to you how you do this, but Jason cleared it up. Price must be above or below your entry if you're going to enter a sell, a buy, or above if you're going to enter a sell to trigger you in and then to trigger you in, yeah?
Mm-hmm.
Okay, fine. So if we look at this example, the results of this market. So what happened here? So we can see price came into this market, and then of course, when price found its momentum, it ended up pushing down, triggering us into this trade. And then here you can see your take profit. Now, I know you guys might say, well, this is a screenshot and you've done this. Listen to me. A lot of the community uses a way of entering the market. It's very powerful. And I'll tell you why it's very powerful as we move on. If price starts to push down and trigger you into the trade, and then you see price start to reverse, what is that potential signs of? Price is either failing to push down or what? Having an exhaustion, okay? So once price pushes at least 25% into your range, what will you now do with your stop loss?
Change it to break even.
Right. If you get taken out of this trade break even, does it matter?
No.
No, because what are you going to wait for? You're now going to wait for price to come back into your stop loss range, start to show signs of rejection on the lower time frames. You will set your sell stop again, and then look. If price finds its momentum at this 4-hour level, price will eventually push down when it's ready. As long as obviously we've got our criteria together of market structure and our proper bias of either buys or sells. Does this make sense?
Yeah.
It does. For everybody else here, does this make sense? If nobody answers me, I'm going to take it as a yes, okay? Let's move on to another example, okay? So now we're looking at this market structure. What do we see?
Price has just broken the trend line.
Okay, so we are potentially looking for what now?
Buys.
Buys. And in order to get into buys, we're waiting for price to push down to find some sort of level of support and continue up, or for price to push up and then come back to a support level and then push up, okay?
Yeah.
Now, we're not rushing into any trades at this moment in time. We're going to wait for price to come into a stop loss range and then find momentum and push back up. So this is a 1 hour time frame, okay? So now what we see, and you probably would have seen this on one of my pairs this week on the live analysis. I had a structure level drawn in this fashion, and then I said, be careful of this level here. I think it was on GJ if I'm correct. So we have a similar pattern. So now we see on the 1 hour time frame, price has come to the support level. Now, of course, while price is up and in around this level, we potentially don't have a stop loss because the stop loss here may be too big. So now, all we're simply waiting for is for price to come back to this level, enter our stop loss range, and then show momentum to the upside. Let's have a look at this in greater detail. So now, what we can see is price is now here. Everybody can see this, right? This is where price is at the moment.
Mm-hmm.
Yeah. This is our stop loss range. So is price within our stop loss range at the moment?
Yeah.
Okay. So now to illustrate this, this level is level 100. Okay. And then where price is at this moment in time, let's just say here, this is 97. So all we're now waiting for is for price to push up to our level of 100, which is our buy stop. And whilst it's pushing up, get triggered into the market. Okay. Let's see what happens here. Now, of course, every example I'm going to show you is going to win, but this is just to show you how we potentially enter the market based on momentum. You can see what happened here, okay? So price was in and around this level. It found its momentum to the upside and pushed up. Now, we got triggered into this trade around this area here with this candle because it retraced. Now, price came back into this area, but what we do know is that based on the higher time frames, the trend line was broken, price came back to a strong level of support, and based on these rejection wicks that we'll see from our 1 hour and 30-minute time frame, price found enough momentum to trigger us into the trade and then give us our profits. Does this make sense?
Yeah.
Okay. Now, all we do is bring our stop loss, and our take profit to the market. Now, we know we can enter this trade because our stop loss to the support level is within reason. And then, of course, our next structure high is here. So with regards to our risk and our reward, do you think this is a good investment?
Yeah.
Yeah.
But we may not take the whole lot as an investment because we only need 15, 20, 30 pips. But as long as we have enough room to the upside or to the downside, then we can enter the trade, okay? Let's have a look at this example. What do we see here?
Price is moving up, and it's just found it's done a double top and found a resistance area.
Very good. So I tried to trick you guys. This is how the pattern would look, okay? We have lots of green candles. We have a break of this trend line. Price came back to this double top level. Okay, this is a 4-hour time frame, so this indicates to us that price is potentially going to reverse. So now what are we patiently waiting for?
A break of that low.
Yeah, a break of this low, or we can wait for price to pull back.
And do a retest.
Do a retest of this level, okay? Because remember, this of course is our first example, this is our second example. Now, if you look at the charts, you would have missed this entry, right? Because your stop loss from this level to this level is going to be too big. So now you're just simply waiting for price to come back to this level, okay? Now, when we look at this on the hourly time frame, what we can see is price has now come back to this level. It's obviously indicating to us that there's lots of rejection. So now, based on the fact that the trend line was broken on the 4-hour time frame and it's come back to a strong level of resistance, we are now waiting for price to come into our stop loss range, which will obviously put in the market in a second, put onto the charts in a second, and then find momentum and push down. Okay, this is how it would look. So now at this moment in time, price is within our stop loss range. When do we get triggered into this trade? This is where price is at the moment. When do we get triggered into this trade? When price is doing what?
When it starts to reject and fall.
And that means price is in momentum. Okay. Now, if price wants to push up, that's fine, because guess what? You never entered here. You are only entering the market when the market starts to push down. Okay. So you're collecting all the information you've got from the higher time frames to say your sell bias. Now, look at this just for an example. If you was to bring your stop loss and your take profit over here, okay, so this is your entry. This is your stop loss. Okay. And then this is your take profit. If price is up here, do you look for a buying opportunity?
No.
Why? Because on the 4-hour time frame, we're sell bias at the moment. The only time you're going to look for a buy potentially on the higher time frame is when price comes back to a structured level of support and does what?
Holds and then pushes up.
Very good. So now you've got your stop loss here. Okay, I'm not going to draw it again. You've got your stop loss here. Price comes to this level. Do you think you should panic? No, because on the higher time frame, we know that this is a strong level of resistance. Okay, this could potentially be what on the 4-hour time frame? Let's see where. Let's see. A what?
A wick.
Exactly. But because the 30-minute time frame closes earlier, we have candles, and this is why we must trust the 4-hour time frame. Okay, so now we have our false breakout. Buyers are now induced into the market. Potential retest traders are now induced to the market. And then what does institutions do? Rally the market back in the direction that it should be going. If you had your sell stop here, would you have got triggered into the trade?
Yeah.
Would you have won your trade?
Yeah.
Very good. If you had your sell stop then you didn't enter immediately when price came here, or would you have saved yourself a loss because it pushed up?
Yeah.
Very good. Okay. So we're starting to get the idea, hopefully. And then look what happens, okay? So price finds momentum based on the rejection wicks on the hour, 30-minute time frame, finds momentum, triggers us into the trade. Even if we enter a break-even trade, look what happens. Price continues to push down, okay? Now, we've secured ourselves a loss if we go break-even. Why do we want to do that, guys? Why do we want to go break-even as soon as we can? What are we expecting price to do?
Push down.
Right. Do we care if price starts to push back?
No.
No. You have to understand, we're not swing traders. We're in the market and we're almost like day traders, okay? Using a scalp and stop loss, but a big target for day traders, okay? So all we're really interested is getting into the markets when the market is just in momentum, and it happens all of the time. Sometimes you may get into a market where it pushes up and then it pulls back. Guess what, guys? Just take your break-even trade. When price is back down, okay, at these levels, what are we just waiting for price to do now? Push back up, trigger us into our trade, and do what? If we're buying at this moment, we're expecting price to push back up, trigger us into the trade, and do what? Just go up.
Yeah.
Okay? So it's better that you preserve your capital than lose your trade, especially if your trade goes into profit. Because imagine now, if price triggers you into the trade here, you now have, let's just say, 7 pips in profit. You're not only going to be losing 7 pips, you're going to be losing 7 pips plus 5 pips. So you've lost 12 pips you've given back to the market. But does that make any sense when you've got a 5 pip stop loss?
Yeah.
Yeah, everyone gets the point. Yeah, so it's better to become a break-even trader and obviously do that more often than losing, because when you do win, you're not going to be chasing your losses. You're only going to be making profits. But it's very hard to see that unless you do it over and over again and you've tried it many times, okay? So you have to try and trust me on this one. Now, what I want you guys to understand, okay, in the market, and I've explained to you already, that price will break your 4-hour structure on the lower time frames, and candles will close below this structure. Now, because candles starting to close below the structure and leave these wicks, does this necessarily mean that we're in a sell bias market?
No.
No. We need price to give us a clear confirmation of breaking a structure level, clear confirmation, and then coming back to that level or breaking that structure level, okay? Now, if you look at your charts, right, the easiest trades to identify are the trades that look something like, well, no, this is not an example. We'll move on to another chart in a minute. But this is what it would look like. The easiest trades to identify in the charts is when you see price doing this, and then it pulls away from a level and then comes back to it and then pulls away. Could you identify after it's happened that this was a good sell opportunity based on this structure here?
Yeah.
Yeah. So this is what you guys have to practice, okay? If you see price pushing up and then you start to use this as your support level, you see price pushing up and then coming back to this level. When you look at your chart, this was the easiest buying opportunity, right?
Yeah.
Okay. So the point is you want to wait for these patterns to start to form. Once you become consistent winning these patterns that are clear and concise, then you can start moving on to more obviously advanced things. But for now, the point I'm trying to illustrate, what may look like candle closes on the 4-hour time frame, as Jason said, will just be wicks, okay? And these are what we call fake outs and stop hunts, okay? Because more often than not, institutions know where our stop losses are, especially if you're trading big amounts of money, they'll know where it is. And of course, with their experience in the market, they know that if this is your 4-hour support level, and you enter a trade at this level, where's your stop loss going to be? Just below the level, right?
Yeah.
Exactly. So what they would do in order to continue pushing the market up, they will fake out on the lower time frames because, unfortunately, retail traders may not be knowledgeable enough to know this. Whereas on the 4-hour time frame, it's just rejection, okay? And then once price starts to reject this level, it finds its momentum and continues to push up. It happens every single day. So this is why I want you to become very comfortable with allowing price to break your 4-hour structures. Until price tells you otherwise, especially on the day, you're still in a buy bias market. Now, the only time you're going to get entered into this trade if price pushes up to your entry level, okay, and triggers you in. Does this make sense?
Yeah.
Yeah.
Okay, fine. Now, this instance, this wasn't the example for me to show you when you get entered into a buy, because you probably got entered a few times. But the point is, you're not entering as soon as price comes to this level. You're just waiting for momentum to the upside. So let me go over a couple of things to remember. Now, I'm kind of shocked at the moment because I was expecting something to pop up, but I'll go to it in a second. I'll just do this quickly, okay? Things to remember when we're obviously trading this strategy and using our sell stops and buy stops is that we must always wait for one 4-hour candle to close at a key level to confirm a potential entry. Now, if this is our key level of resistance, and then we're waiting for a 4-hour candle to close here and it starts to push down, does that mean we've missed the opportunity?
No.
No, because we can wait for price to either pull back or we can wait for price to break the structure level low. Does this still mean that we're in a sell bias market if price breaks this level?
Yeah.
Yeah, because all we wait for is a retest, and that's as simple as it is. If we don't have a 4-hour candle close at a level, then do not take the trade. Okay, because price more often than not, as you would have learned this week, will not reject a level immediately unless there is huge orders at that level. And more often than not, that doesn't happen all of the time, okay? So you must wait for a 4-hour candle close. Also, you want to see at least 2 1-hour rejections at that key level. Within your 4-hour candle, how many 1-hour candles do you have?
4.
Very good. So is it not reasonable enough to say we need at least 2 1-hour candles at that level showing signs of rejection to confirm price has attempted to break that level but left a wick? Can you see how we're trying to build this up here, yeah?
Mm-hmm.
Yeah.
You must always patiently wait for price to come into your stop loss range. So you will never enter the market when price comes to your 4-hour level, because what do we know price is allowed to do on the 30-minute and 1-hour time frame? If price pushes through your 4-hour level, we call this a potential what?
Fake out.
Fake out. So we are now only entering when the market starts to push down in momentum and trigger us into the market. Does this make sense?
Yeah.
Yeah.
So while price is above our key level or within our stop loss range, this is when you can start to look for a potential opportunity. But you must have a reasonable stop loss to enter the market. If it's bigger than what you have allocated to your trading account, then you do not enter the market, okay? Now, what time frames do you enter the market? Well, it really doesn't matter. You can enter it on the 1-hour time frame or the 30-minute time frame. Does anybody know why this does not matter?
Because you're using the 4-hour area, you're looking for that level of support, which would be the same on all of them, really.
Very good. And we're not focusing on any candle patterns at all. We are only focusing on rejection based on our knowledge and understanding of market structure. So we've already built our bias from the 4-hour time frame, and we're only going to be using the 30-minute and the 1-hour time frame to indicate exhaustion. We're not going to be able to get into the market if the market continues to push up and we're looking for sales, because we only get triggered into the market when the market is in momentum. So candle formations mean nothing to us. All we're waiting for is for price to come into our stop loss range or above it and then enter the market when price starts to push down. Does this make sense? So it does not matter whether you enter on the 30-minute or the 1-hour time frame, because you're not looking for candles, you're looking for momentum. Does everybody get this?
Yeah. Mm-hmm.
Okay. Now, if your stop loss is in the area where price will potentially pull back to, you do not take a trade. Okay. If you know that price is potentially going to pull back to that level for whatever reason, then do not take the trade. You only want to enter this market when you are sure that price may push down based on your higher time frame analysis, okay? Now, one thing I want you guys to understand is with price action, you will notice that price usually pushes between ranges, okay? And how we identify a range is, say now this is your first level of support and we're looking for sales at this level. Your stop loss is 10 pips, and you enter a sell at this level, your range to this level is potentially going to be 40, 60 pips. Does everybody get this example, this range?
Yeah.
Okay. Now, if you enter the market and you see price pushing up and then price does this and then pulls back, your range now to this level is much smaller than you saw. If your stop loss is 15 pips and then your target to the next level is 20 pips, do you think you can take that trade?
No.
No, because you want a range big enough to at least be 2 times bigger than your stop loss minimum. Okay? So if your stop loss is 10 pips, you need a range of 20 pips minimum to enter the market. Okay? The bigger your range, the better the opportunity for you to get into the market. Why? Because you're looking at your return of investment.
Yeah.
Okay? And that's what's most important. It doesn't matter how many times you lose a 10 pip trade. If you're going for 60, 70, 80 pips, eventually one of those trades will win. So you know that you're going to be covered. But if you're constantly going for 10 pips and 10 pips, then that means you have to be much better at winning than you would losing. And nobody in Forex can do that. I mean, you can have a higher win rate, but even the best traders in the world only trade at around 50 to 55%. Would you believe it? So us as retail traders may be trading higher because we have a different approach and we're not risking as much. So we don't mind risking. But what you have to understand is your return over investment is so important, okay? And your risk to reward ratio is what will save you in this market. Later on at the week, this was supposed to be Friday, so this doesn't really follow on for you to watch the bonus video. So if you want to watch it, that's completely fine, actually. I did say not to, but if you want to watch it, you can watch it as of tomorrow or today, whenever, and then we'll go over some more advanced things tomorrow. But for now, I want you guys to understand how you enter the market. Now, I'm a bit disappointed in myself because you were supposed to see something else, and I do not know why we have not seen it as of yet. And Jason, where am I finding this?
What was that?
Where's my shield and my sword, man?
It was on, is that any bonus? I think so.
Was it?
It's supposed to be on entries and stop loss.
It was here, innit?
Yeah?
Oh, you know why it's not here? Because I made it up as I was going along. Right. So let me explain something to you, right?
Or is it a video but not any content?
Yeah, it was in the video, and I had it in my brain for the day. So what Jason was mentioning about, okay, shield and sword, guys, is that this is what's going to save you in the market, okay? Does everybody understand this? This is what's going to save you. Having a fixed stop loss and, of course, a good risk-to-reward ratio. Now, the way I illustrated this last time was by saying, and you will see from the bonus video as well, it all pulls together, this is your shield in the market, okay? This is your shield. Now, of course, your shield's there to protect you. So if price doesn't do what you expect it to do, which is push down, you have your shield here to protect you, okay? So if price pulls back and stops you out, you don't lose more than you intended to lose. Does this make sense?
Yeah.
Yeah. And then, of course, this is going to be your sword in the market, which is your potential opportunity to win your trade. So if you understand that, as simple as it is, your stop loss is your shield and your take profit is your sword. The way we look at this, okay, and this is the way I illustrated it last time, all you do is bring your stop loss to the market, you place it against your resistance or support level, and you wait for price to come into your stop loss range. And of course, when price is in momentum, and then then you get triggered into your trade, and then of course your sword is what you potentially win the trade with. Okay. Now, again, I'll illustrate this. Let me go back one more page for you. What we need to do now is bring our shield into the market, okay? And this is what's going to protect us when we potentially get entered into the trade. And then we bring our sword in, which is our potential reward. Okay, this is how we bring it. We simply just bring our stop loss. We have it fixed at whatever it is, 5 or 10 pips, and all we simply wait for is the price to push up. If it fails to push up and comes back down, then we get protected, and then we move on to another trading opportunity. And that's how I want you guys to go into the market. This is how to approach the market and look at it this way as of tomorrow and moving forward. Back test it, paper back test it, okay? Go to your charts and look at areas where you potentially would have entered, and then put your children's sword against your key levels and see how price reacts to it, okay? I want you guys to follow up with the bonus video today or tomorrow, whenever's best for you, okay? And then see how you can pull those things together. We'll leave it there today. If you guys don't understand sell stops and buy stops, then I'll do another bonus video on Saturday for you, okay, explaining how to use them. But does everybody kind of get the overall gist of what I'm trying to explain here with regards to entries?
Yeah.
Yes.
Okay, very good. If you don't, please message me and ask me. Try and just trust me on this, okay? This is how I trade. It's very powerful. I spent hours and hours and hours and hours and hours trying to master this, okay? And it is as simple as just waiting for price to come to your key level and then getting triggered in when the price is moving in your direction that you intend it to move, okay? And of course, you want to make sure that your return of investment is positive, so you have a good risk-to-reward ratio, and you always want to protect your trades ASAP. So if price moves, just say 25, 30% into your favor, put your stop loss at break even. Even if you get stopped out and price comes back into your stop loss range, you can enter the market again, okay? We're not here to prove the market right or wrong. We just want to make money, and that's all we're focusing on. Does this make sense?
Yes.
Very good.
Yeah.
So, guys, I hope you obviously enjoyed that. I told you it's going to be very simple. Sorry if it came out a bit different to what you may have watched before, but it's the same concept, okay? And if you watch it back, hopefully, you know, you can start to master this. With regards to buy stops, sell stops, I will do a bonus video. I think it'd be worth adding it to the course. And if you have any further questions, then just let me know. And of course, we'll go over it. Is that okay, everyone? Yeah?
Yeah, that's
Very
great.
good. All right. Well, I hope you have a good evening. Guys, we'll go over the last lesson tomorrow, looking at structure level highs and lows and how we can start to use the knowledge that we've gained this week in looking for potential trading opportunities, but just at a tiny bit more of an advanced level. And we'll go over some double tops and double bottoms, why they're important. Not to take trading opportunities, but identify that those trading opportunities will arise if they're the patterns we're going to be looking for, okay? So tomorrow we'll try and make it, as it's Friday, maybe a little bit earlier, or if you guys want a little bit later, I'll put a little, put it out there to you and see what you guys say. And have a look at the bonus video if you can, today or tomorrow. It'll be in the other break and retest course. And again, if you have questions, let me know, okay? So take care, everybody. Have a good night, and we'll speak tomorrow.
Great. Thank you.
You're welcome. Take care.
Bye.
Bye-bye.